As we've been talking about, those Meta shares are slipping this morning after the company notched another disappointing quarter. The second quarter marked the end of a decades-long revenue growth streak for the company formerly known as Facebook. The social media giant saw a 1% drop in year-over-year revenue, predicted the third quarter could see an even bigger drop. Joining us with his take on Meta's latest quarter, UBS equity research analyst Lloyd Walmsley. Lloyd, thank you for being here. There's a lot to dig into when it comes to Meta. The company talked about making changes to its ad servicing platform, right, to try to adapt to some of the tracking changes that have been made, engagement changes perhaps of its users. Is that effective enough for the company, or is it hamstrung by what's going on in the broader economy?
Yeah, there's a lot going on at Meta these days. Specific to the ad server, look, I think they're in a position to weather these changes from Apple privacy better than most people in the industry. They have a lot of data about their users, a lot of historical behavioral experience that they can use to target ads and measure ads. It's still a work in progress. I think it will take them likely another year to continue to rebuild the underlying ad infrastructure, but I think they're already making progress from what we hear talking to advertisers, getting through this. And again, they're in a better position than almost anyone in social media to figure this out.
Lloyd, revenue has really decelerated at Meta. Earnings growth has really decelerated at Meta. You've seen operating profits also decelerated. Do you buy or sell the stock?
We like it. We have a buy rating on the stock.
Even with these things slowing down?
Even with these things slowing down, I think we're in the heart of the storm right now. You've got these privacy changes, where they're starting to make some improvements, but they haven't yet meaningfully change the trajectory of advertising. We think it will have more of an impact positively next year. They're still comping really difficult comps from last year from the pandemic, which saw a surge of online activity. And with that advertising, those comps start to ease going forward. And then look at what they're doing with the app redesign. Look, it's a risky strategy. We're of the view that ultimately it will unlock more time spent. And with that, over time, more advertising dollars. And so right now, everything is working against them. A year from now, we think the story looks a lot cleaner. Stock's very cheap, a lot of upside to the multiple as the story starts to become clear that they can get back to a path of faster top line growth.
Lloyd, I'm going to take the contrarian side of that, using history as my guide and the Kardashian engine that has said in the past that the second they didn't like the user experience on Snap, they went somewhere else. They focused their attention elsewhere. And ultimately, they've said the same thing now about Instagram. And so if you have that type of the prominence in this broader influencing marketing society and kind of the disingenuous nature of all of the ads and the suggested things that you should be following on the social platform, how does that not detract from the popularity of even continuing to engage at the same rate that we had seen in the past, regardless of year-over-year comps? Does it start to fade out?
Look, I think that hits to the crux of the debate around Meta right now. The bear case is that they've seen peak engagement and core Facebook fades into irrelevance over the next 10 years, and eventually Instagram follows suit. TikTok is clearly an insurgent force in the social media world. I think what our view is really that what they're doing to change the app is going to drive more time spent. And it's totally understandable that it creates somewhat of a backlash, particularly an influencer like the Kardashians that have benefited from the historic algorithm. This new algorithm kind of democratizes content. It's no longer about following big, prominent, famous people. The algorithm is just going to show you what it thinks you're going to like. We've seen with TikTok, it's a powerful dynamic. I mean, the time spent per day per user on TikTok is the equivalent of a movie's worth of time every day.
But what about the people who don't, like we were just talking about this. I mean, maybe, I'm in my mid-40s. Facebook doesn't want me anymore, I guess. Like, what about the people who don't want that? I don't want TikTok. I'm not on TikTok. I'm on the other stuff. Like, I guess that cohort is not large enough or lucrative enough for Facebook to care about anymore?
Look, it's interesting. One of the things that they're experimenting with on Instagram is having multiple news feeds so that you can have One that is algorithmically driven, where the machine will look beyond what you're following and show you a mix of your friends and family, but also the entertaining videos. But then they're starting to roll out an ability to toggle to another feed that's purely who you really care about, friends and family, and then a third feed that's purely algorithmic. So I think they're doing this in a way to try to allow people to adjust the feed based on their personal preference. Admittedly, it's complicated, right? I mean, it's complexifying the product. It's not clear if it will create a backlash a la Snap in 2018. I think that is the bear case, is it just further alienates the core user base, and they can't replicate TikTok, and they alienate their core user base. This is a company that has executed extremely well through a variety of transitions, the mobile transition, the newsfeed itself. So they have, a good track record managing these things. But look, it's not without risk, and it's what they're doing is bold.